One of our viewers asked this question: should I pay off my mortgage for retirement with a HELOC, home equity line of credit? So stay tuned for the full detail. Here's our question from our viewer: is paying off your mortgage with a HELOC or personal line of credit a good idea? I've seen a few videos on this. What's your take? What does HELOC stand for? Thank you for watching. This is Richard with Wisdom Investor. With real estate values increasing by leaps and bounds, many people are building up equity in their homes, and they're looking for ways to tap that equity, either for home improvements, maybe cash, and various other methods. Now, in this case here today, we have a viewer that wants to possibly refinance or pay off their mortgage using a HELOC. So let's look at a HELOC a little deeper here. A home equity line of credit, otherwise known as a HELOC, is based on your home equity, and it's a line of credit you draw from, and you only pay back the amount you actually borrow. It's also considered a revolving credit line where you make payments, you pay it off, and you can take it out again. Now, a home equity loan is also based on the equity of your home, and it's an amount that is determined that you're going to take out as a loan, and you pay the full amount back. Now, on a HELOC, lenders will evaluate your situation just like they would with any other loan or mortgage. Now, in addition to the HELOC, there's also a couple other ways that you can refinance a house. So our viewer here wants to know if this HELOC line of credit makes sense to pay off the mortgage. Let's take a look at how they figure how much they will loan you. HELOC lenders will usually lend up to 80% of your home's value minus the amount that you owe on your mortgage. Here's an example. $250,000 home value. You have a $100,000 loan balance left, so they'll take 80% of the home value, 80% of this $250,000, that comes to $200,000. Then they subtract the loan balance from the $200,000, and that means they would possibly loan you up to $100,000. So the question is here, does this make sense to take a home equity line of credit and pay off the original loan? Now, keep in mind also, many folks either refinance their house or get a home equity line of credit or a home equity loan. They're not necessarily trying to pay off another loan. Maybe they want to tap into their equity that they've built up and use that money for home improvements, maybe buy a car, maybe buy jet skis, maybe they want the cash out of it. So there's various other ways that people use these types of loans. Let's take a look at some advantages here of the HELOC. Some advantages here could be if you shop around and find a better interest rate than your current mortgage, than your original mortgage, that could benefit you. Now, what are some of the disadvantages of a HELOC? Keep in mind, it's not free money. Technically, you could get a home equity line of credit and use it for something else, which could be a negative because you're increasing more debt. Now, in this case, again, we're trying to pay off the loan. A big negative here is rates are typically variable on the HELOCs. So the rate can fluctuate up or down. If rates start to go higher, then that would be a negative for the HELOC. Most lenders do not do a fixed rate. You can find a fixed rate in certain cases, but they're going to put some stipulations on there that's going to make it a little bit more difficult. And as we said a moment ago, HELOCs, home equity line of credit, also have closing costs for various title searches, appraisal fee, credit reports, and so on. Now, what are the advantages of a home equity loan that we talked about a moment ago? First of all, typically they're low fixed interest rates. The HELOC has a variable rate in most cases, so the home equity loan would be much more beneficial, in my opinion, if interest rates continue to move higher. The money can be used for any purpose. You could use it for home improvement, various other reasons, and you could also convert the equity into cash. Keep in mind too, the home equity loan and the HELOC, the home equity line of credit, you have to pay those back. If you do not pay them back, you're at risk of mortgage default and you could lose your house. So to answer our viewer's question, I would not use the home equity line of credit to pay off his mortgage in this case. So I want to thank you for watching. Stay tuned for the next update.